a blowout jobs number. How much momentum is in this economy?
Yeah, you mentioned the word momentum, and that was exactly when we were talking about today's number last night with the president. Momentum was really the key theme of the briefing that Pierre, the CEA chair, and I discussed with the president. The fact is that there's so much momentum because of all the positive policies, the deregulation, the low tax rates, and you're seeing all the positive stories about no tax on tips and no tax on overtime. I, by the way, was at a restaurant yesterday, and I asked all the waiters how much money they made on the no tax on tips, and the range was from $3,000 to $10,000, and they were all so happy. So that's like a positive momentum creating thing that I think if you have your eye on the horizon, as America's corporations do, absolutely explains why job markets are booming. And so I think that if you keep your eye on the horizon, if you understand the long-run growth, the golden age is coming because of our policies, then this jobs number makes complete sense. The final thing I want to say is I want to tip my cap to my former colleague in the Trump White House in the first term, Anna Wong, who's now the chief economist for you guys. You know, I always read everything she writes, but at the beginning of the week, she said almost exactly this is what's going to happen, and she was the only person in the universe that did it. I commend her because she's got a great model, and she got the number almost exactly right. And finally, in her report, she said, if you really want to wonder about momentum, you can also look at the 3-month moving average, because we had like that big blip down in the previous month. And she said with her really optimistic outlook, it was going to go up to 61,000 average per month, and it's actually closer to 68,000 now. And so it really is a very, very positive day for markets.
68 on the money, the 3-month average. Anna was looking for 150 headline today. We got 178. Bramo, do you think that Kevin might be popular in restaurants at the moment?
I think very much so. I think that he's trying to exploit that, trying to get some free onion rings.
Kevin, no doubt we've got momentum and lots of reasons for it. We've got the tax refunds starting to come through. The Fed had cut rates at the back end of last year. Some of the biggest companies on the planet are spending a lot of money. Those capex intentions are huge for the year ahead. How insulated do you think the US economy is, given the shock in the Middle East and the reality that energy prices now are a lot higher than they were a few months ago?
Well, one thing is that the U.S. is really the engine that drives the global economy again. And we kind of lost that status, I think, under the previous administration. And so I know that there are starting to be some supply disruptions in the East and so on, but the U.S. is standing ready to export more to these countries, more refined product, more crude. And also, we've taken a number of steps to minimize the disruptions here in the U.S., doing things like waiving the Jones Act so that we could get U.S. gas and finished product over to the West Coast. And so I think that in the end, the strength of the U.S. economy is going to be something that's kind of like a safety net for Asia as they're dealing with the fact that they have to import all their oil. And so shocks, they're more sensitive to shocks.
They're experiencing real shortages. We've seen fuel rationing in places like Indonesia. Certain governments introduce 4-day weeks. No doubt we have abundant supply across much of this nation, with the exception of a couple of places. But we're still price takers in America. And Kevin, I wonder from your perspective, given the momentum we have, and given the higher prices in energy, just what is the prospect for broader price pressure picking up from here for the year ahead?
Well, what I would urge you guys to do, and you have the technical capability to do it, is something that I look at every day, is look at what the futures markets think. And also, if you look at the options markets, you can construct a sort of 95% confidence interval of what's possible with energy prices. And if you look at that, then it pretty much futures markets agree with President Trump that this is going to be a temporary disruption. And then the strength of the U.S. economy is going to basically be a bulwark for the global economy. And so I would suggest I keep a close eye on the futures markets. You know, forecasting these things is very difficult, but the futures markets have, you know, basically prices going back towards normal over the summer, but there is a pretty wide 95% confidence interval.
There is a question, though, Kevin, how much you can really model out right now, given how quickly moving things are on the ground. And a lot of people who we speak to expect oil prices to remain higher for longer. We're looking right now at diesel prices at $5.53. We're looking at average gasoline prices at above $4. Can you still see 4% GDP growth this year if oil prices remain at these levels?
Yeah, absolutely. I don't think, as you saw with today's jobs report, that we should expect that people are going to have to revise their annual forecasts very much. And I think that the main reason for the U.S., and the main reason is that we're a much different economy than we were in the 1970s when we were so energy dependent. I do think that there will be some negative repercussions that'll be very short-lived in the Asian economies, and we expect that disruption to be over really, really soon. It's something the president has emphasized over and over, and emphasized again with me last night.
How much are you modeling, though, what happens if this goes on through June, through July, through August? I mean, how much do you have contingency plans for what type of levers you could pull to help support an economy that has enough momentum in it heading into this at a time when people already are cutting back around the margins? You can see this in certain discretionary spending types of surveys that are coming out in real time.
Our job is to prepare for every scenario, but to be realistic about what we expect. And what we expect with a high confidence is that what you're seeing in today's jobs market will continue, and that this situation in the Middle East will be over very shortly, as the president has said over and over. And then people can put their eyes back on the horizon and see that we're creating a golden age. But of course, we're very careful to think about what could be disrupted and what we could do to do something about it. And as an example, we found that some Asian economies were holding back jet fuel shipments to some of our airports of the West Coast. And so we waived the Jones Act to make sure that we could get some Gulf oil to the West Coast so that their airports could continue to run. There are little things like that all around the world that happen every day, and we've got people who are watching every single one of them to minimize the disruption.
How much are you pushing, Kevin, also to remove certain taxes on gasoline, on diesel, in order to also make it more affordable in the near future?
Well, I think that right now the focus is on finishing the job, and our strong belief is that if we do that, then we're going to get things back to normal very, very quickly. And don't forget, we're talking about the cost of what we're doing. The benefit is that we're hopefully ending the time when this really murderous country can cause turmoil throughout the Middle East. And if you think about that, then I'm sure that some of your Wall Street friends could give you some guesstimates today, but what's the higher risk premium that's capitalized into markets all around the world because of Iranian terrorism? How much more investment would there be in the Middle East if people aren't worried that the Iranians are going to be throwing rockets at them all the time? These are all long-run big positive effects, and if this ends shortly, then I think that you're going to see a recovery, even in the places that are currently most heavily burdened by this, because they're the ones who have been really suffering so much under the oppression of this country.
Kevin, can we finish on the war? And I don't expect you to talk about strategy and timelines. We've talked about that before. You wouldn't want to compromise the safety of our troops in the region at the moment. I'd like to finish on objectives and reopening the Strait of Hormuz, because some of the communication through the week has been slightly contradictory in the minds of some. That on the one hand, the president has said, open up the strait or else. And other days, the president has said, it's up to other people to open up the strait because they're more dependent on it. Where are we on that front at the moment? Is it the objective of the administration to reopen the Strait of Hormuz?
I'm going to continue to let the president speak on that matter. I think that we are moving full speed ahead with our plans, and we believe that as we do that, things will return back to normal relatively quickly. But as far as talking about short-term policy, I'll let the president speak for himself.